A lot of investors here at home are looking to strike it rich, but not in oil. Instead, they're looking for big growth and big returns in technology startups, and some of those startups are seeing their valuations strike it big. Josh Lipton has more now.
Investors are always looking for the next big thing. Facebook and Twitter shot higher after going public. Those stocks are up 50 and 110% respectively. Venture capitalists are now piling into private Silicon Valley companies, setting their valuations well above $1 billion. The Wall Street Journal reports that the valuation of Palantir has ballooned to $9 billion. Box, the data storage company, is at $2 billion. Pinterest is at $4 billion, and Facebook was willing to pay $3 billion for Snapchat. But where do these numbers come from?
This is a little bit of a black art, and I think
Dylan Tweeney of VentureBeat, who covers venture capital, says investors are willing to pay more because they're worried about missing out on potentially huge returns.
It's not like there's a formula you can apply or a computation that you can do that comes out with the number. I think a lot of what we're seeing right now is a product of just a lot of investor enthusiasm for technology startups. There's a lot to invest in. There are a lot of companies that are doing really interesting things, and investors don't want to miss out, so they're willing to pay a higher price.
Andreessen Horowitz and other VCs say a lot of companies are staying private longer. That means startups are bulking up their revenues, which also sends their valuations higher. Companies in the public markets play a role in the valuation game as well. Professional investors try and model out what a private company could be worth based on the performance of a successful public company with similar financial characteristics.
And when you think about the innovation,
Tweeney mentions another reason for the run-up in valuations: competition among VCs who are chasing fewer good ideas.
There are VC firms that have raised enormous war chests, like Andreessen Horowitz in particular. And with that much capital in the market, chasing so few opportunities to invest it, that's going to tend to drive prices up.
Academics and those working in Silicon Valley say there isn't another bubble brewing here per se, but there's no question that some of these pre-IPO valuations are in part based on hype, not fundamentals. Josh Lipton, Nightly Business Report, Silicon Valley.